Today we're going to talk about allocating support department costs and joint costs. I assume you've read the chapter and are familiar with those terms. They're not difficult terms, but if you haven't, please do so, because we're going to be going over examples, and that's the main focus, is the examples, not the definitions. Okay, so let's get started. Now, this allocation process is based on activity-based costing, which you're already familiar with. And for allocating support department costs, we're going to look at the simplest method, which is simply the direct method. In our example, our company has 3 production departments: forming, which is how you stamp metal parts into their various shapes and sizes; assembly, you're putting all the pieces together; and packaging, getting it ready for shipment. And we have 3 support departments: purchasing, payroll, and cleaning. Okay, we need to incur these various costs, but they're not really part of production. But the production departments generate costs for these support departments, and we need to allocate those costs based on how much activity the production departments generate for each support department. So we'll see what that means momentarily. The purchasing department, okay, they generate purchase orders. In order to generate purchase orders, they have to research vendors to make sure they have the proper parts and they can get the quantities that we need and negotiate the best possible price. So those production departments that generate more purchase orders create more work and, as a result, more costs for the purchasing department. We're not talking about the cost of the raw materials. The purchasing department cost of $80,000, that's the cost of a couple of employees' wages, the computers they work on, the fact that they use utilities like electricity and lighting and air conditioning, and they use office supplies. So the costs that they incur to be able to place purchase orders on a large scale, that's the purchase department cost of $80,000. We're going to allocate those to the production departments based on the number of purchase orders that each production department generates. The more purchase orders, the more work the purchase order department is doing, the more costs they're generating. And so those production departments that generate more purchase orders should be charged more of that $80,000. Payroll. They generated $50,000 of payroll-related costs, which is predominantly the employees' wages, but they also work on a computer and they have a desk and they consume electricity, etc. And so the production departments that have more employees, they generate more paychecks and all the various calculations that go into a paycheck. Think of your own paycheck, all the various withholdings. The company has to cut checks to the various different government agencies based on federal tax, state tax, Social Security, Medicare, etc. So the more employees, the more costs incurred by the payroll department, and that production department that has more employees should absorb more of that $50,000. And the cleaning department costs of $40,000 will be allocated based on square footage. The bigger the square footage for each department, the more time they spend cleaning. Okay? Here are the various costs. So for forming, assembling, and packaging, think of those costs as raw materials or direct materials, direct labor, and overhead. Okay? Now, we are only going to allocate the support department charges to the production departments. We are not going to allocate any support charges to other support departments. You can do that, and in fact, it's appropriate, but that's a more complicated method, which we're not going to talk about. Okay, so if you look at the cost drivers, the number of purchase orders, the number of employees, the number of square feet, you can see for each of the production departments, and that's how we're going to allocate the costs. We're going to ignore the purchase orders, number of employees, and square feet of the support departments. We're not going to allocate to those departments. The forming department has used 2,000 purchase orders. The assembly department has 1,200 purchase orders. Packaging has 800. If you go to the middle part of the slide, you see that 2,000 plus 1,200 plus 800 is 4,000. And that 2,000 purchase orders is 50% of the total of 4,000. That's where that 50% comes from. 1,200 purchase orders from assembly divided by a total of 4,000 purchase orders is 30%. And 800 purchase orders divided by 4,000 is 20%. 50% plus 30 plus 20 has to equal 100%. We have to allocate the full amount. For payroll, the number of employees. Okay, 150 people in forming, 450 in assembly, 150 in packaging for a total of 750. 150 employees divided by a total of 750 is 20%. 450 divided by 750 is 60%, and 150 divided by 750 is 20%. That's how we're going to allocate the payroll department costs. Okay, in square footage, you can see 10,000 square feet plus 12,000 plus 18,000 is a total of 40,000 square feet. 10,000 divided by 40,000 is 25%. 12,000 divided by 40 is 30%. 18,000 divided by 40 is 45%. And the percentages will all add up to 100%. So that's where we're going to allocate these support department charges to the production departments. Okay, and here's all the calculations. Purchasing, with 2,000 purchase orders with 50% of the total purchase orders of 4,000, right? So purchasing had $80,000 of costs, 50% get allocated to the forming department, that's $40,000. Assembly had 1,200 purchase orders, which is 30% of all the purchase orders. And we multiply the purchase department costs of 80,000 times 30%, we get 24,000. And packaging, 800 divided by 4,000 is 20%. 20% of 80,000, we allocate $16,000 to the packaging department. And so you can see in the cost allocation line that the 80,000 is allocated based on the number of purchase orders used, which is 40,000, 24,000, and 16,000. We do the exact same thing for the other two departments. Forming has 150 employees, which is 20% of the total employees of 750. The payroll department had $50,000 of costs. 20% of that goes to forming, which is $10,000. Assembly has the most employees, 450, which is 60% of all the employees. So the $50,000 of payroll costs, 60% or $30,000 goes to the assembly department. And then packaging also had 150 people, which is 20%. So they get 20% of the 50,000, which is 10,000. And again, cost allocation line, we see 10 plus 30 plus 10. There's the 50,000 allocated based on the number of employees. Last, the cleaning department is allocated based on square footage. 12,000 feet for forming, that is 30% of the total of 40,000 square feet. So 30% is the percentage we use. We multiply that times the $40,000 that the cleaning department generated in costs. That's $12,000. Assembly, 15,000 divided by 40,000 is 37.5%. So we multiply 37.5 times the 40,000 of cleaning department costs. That's 15,000. And then 13,000 divided by 40 is 32.5% times 40,000 is $13,000. And at the bottom, 12 plus 15 plus 13. That's how we allocated the $40,000 in costs. So now we're going to put it all together. Okay. The top line are the materials, labor, and overhead costs by the three production departments. And then below that, you can see there's the additional support department allocations for each production department. And those numbers all came from the previous slide. And so when you add everything up together in each column, forming 200 plus 40 plus 10 plus 12, total costs of $262,000. Assembly is $219,000, packaging $139,000. And then what we'll do, not in this video, is that 262, the 219, and 139, we're going to end up putting into the final products. That's the last part of activity-based costing. Okay, so that is how we allocate support department costs using the direct method, which again is the simplest of the methods. Now we're going to look at joint costs. I like to use gasoline and crude oil and all these petroleum products as an example because it's an easy visual. I want you to think of a giant pipeline that the big boats that come from the Middle East or from the Gulf of Mexico, they have all this thick black crude oil, and they have to pump this to the refineries. And so think of a great big pipeline with the crude oil going through it, and then the refinery is starting to add chemicals and turn up the heat and start creating these chemical responses in the crude oil and thinning it out so that it can be made into a variety of different products. So while it's in the big pipeline and the company has started to add costs to thin it out and heat it up, those are called joint costs. At some point, think of the pipeline being my hand. They're going to split off into different products. Gasoline, kerosene, could be asphalt, could be motor oil, could be paraffin, variety of different petroleum-based products. Okay, so that's what we're going to get to, is at the split off point where the products become different. All those joint costs prior to the split off point, we have to allocate that to the different products. And we're going to look at two different methods in terms of how we allocate those joint costs before the split off point. We'll look at the physical units method and the net realizable value method. And they're not that complicated. There are a total of $5 million of joint costs. Think of the big pipeline before the split off point where we get to those different products, right? And we have to allocate that $5 million. And we're going to allocate it based on the total physical quantity of gasoline, kerosene, and lubricating oil. Notice there's 1 million gallons of joint product before the split off point that's going to ultimately make 500,000 gallons of gasoline, 300,000 gallons of kerosene, and 200,000 gallons of motor oil or lubricating oil. So 500,000 gallons divided by a total of 1 million is 50%. 300,000 divided by 1 million is 30%. 200,000 divided by 1 million is 20%. That's the physical units. So we're going to allocate the $5 million based on the quantity of product that ultimately will be produced for our 3 different products. So we multiply the 5 million times 50%, and 2.5 million will be allocated to gasoline. 5 million times 30%, 1.5 million gets allocated to kerosene, and 5 million times 20%, $1 million will get allocated to the lubricating oil. 2.5 plus 1.5 plus 1 million. We've just allocated the $5 million of joint costs using the physical units method. As simple as something can possibly be. Okay, now let's look at the net realizable value method. Same thing, we have to allocate the $5 million of the joint costs to the 3 products, but we're going to do it based on net realizable value. Net realizable value is how much are we ultimately going to receive from selling our product. Now, in order to get to gasoline, we're going to have to incur an additional $600,000 of processing or refining costs, and then we're going to be able to sell the gasoline for $4 a gallon. Kerosene, we're going to incur an additional $200,000 of costs, and we'll be able to sell it for $3 a gallon. And then lubricating oil, we'll incur $100,000 of additional costs, and we'll sell it for $2 a gallon. So those are the numbers we'll use, okay? And again, there's the physical quantity of products, there's the additional costs to further process to the final product, and that's the selling price. So 500,000 gallons of gasoline times $4 a gallon will generate $2 million in revenue. We had to incur $600,000 of processing costs, so the net realizable value, the amount that we'll receive after all the costs, is $1.4 million. Kerosene, 300,000 gallons times $3 a gallon is 900,000. We had to incur 200,000 of additional processing costs. So 900 minus 200 is 700,000. That's how much we'll get. That's our net realizable value. Okay, and then lubricating oil, 200,000 gallons times 2 is $400,000 minus the 100,000 of processing costs. We will net or receive $300,000. So now if we add up the net realizable value, 1.4 million plus 700,000 plus 300,000, that's 2.4 million. Now let's divide each product by the total net realizable value. 1,400,000 divided by 2,400,000 is 58.3%. 700,000 divided by 2.4 million is 29.2%, and 300,000 divided by 2.4 million is 12.5%. And again, if you add up the percentages, you'll see that it equals 100%. So using those percentages of net realizable value, that's how we're going to allocate the $5 million of joint costs. And there it is. 5 million times 58.3% is 2,915,000. 5 million times 29.2% is 1,460,000. And 5 million times 12.5% is $625,000. They add up to the $5 million in joint costs that had to be allocated to the products. There's 100%. And we have now allocated those joint costs to the products based on their net realizable value. Okay? And it's really a pretty straightforward concept. So rewind, hit pause, do what you got to do, but this is not a difficult topic. You should be able to get a good grip on this stuff.